introduce to you the moderator of the session. We're talking about the Chief Editor, CIO News, the very vibrant Khushbu Soni. Let's give her a warm round of applause. Thank you, Ms. Soni. Thank you for joining us. Joining Ms. Soni amongst her eminent panelists, CTO and co-founder of Kaleidofin, Natasha Jethanandani. Let's give her a warm round of applause. Thank you, Natasha. Chief Product Officer and Business Head, New Platform CAMS, Soumendu Ganguly. Mr. Ganguly, do we have Mr. Ganguly? All right. The Chief Business Officer of Neokred, Vivek Sridhar. Let's give Mr. Sridhar a warm round of applause. Thank you so for joining us. And the CEO and founder of BimaPlan, Vikul Goyal. Thank you. Ladies and gentlemen, once again, a warm round of applause. And with that, Ms. Soni, if you can take that forth with your conversation.
Thank you so much, Bhavna.
Pleasure.
Wonderful. I think, Bhavna, you're doing an incredible job. I've met you in the past as well, and you're always good with what you do. So thank you so much for the quick intro. Hello, everyone. Good. I see a few people, and the room will fill as we go. But we'll try and make it more as exciting as we can while we talk about today's topic, that is navigating the future of personal finance, right? In the last panel, we had some of the great leaders from the industry who spoke about digital currencies, who spoke about UPI, the future of Fintech, right? And it all is for us. It's all for the individuals. It's all for the personal finance. It's for people, right? So it is very important to hear we as individuals, what are we looking at? What are we expecting from the digital era? And I think that is what I would want to cover in our panel as well. So I would want to do a quick introduction. I'll call out the names, and if you can give a quick introduction about yourself, I think that will be a good starter. Awesome. So we have Natasha Jethanandani. She's the Chief Technology Officer and co-founder at Kaleidofin. Natasha, if you can give us a quick brief about yourself, that'll be excellent.
Sure, happy to. So Kaleidofin is focused on building a fintech platform that really focuses on the informal sector customer. We feel very few companies are really focused on that, but it's a massive customer segment. And we have done a huge amount of work in that, spanning from connecting all kinds of partners to this customer segment, building a credit score that's designed for this segment, as well as looking at savings, insurance, and various other solutions. So it sort of is a full stack.
Awesome. Thank you, Natasha. Next up, we have Vivek Sridhar, the Chief Business Officer at Neokred. Vivek, if you can give us a quick intro.
Yeah, good afternoon, everyone. Neokred, we are right now building a banking as a service platform, which includes data analytics about individual customers. We also look at having a profiling of a customer created right from an NTC perspective. How do you ensure that a new customer gets the credit that he wants whenever he applies for a loan in the market? And also we have our own payment stack that we're processing at the back end. I myself come from a digital banking background. I've been with multiple banks, headed digital banking, and today building Neokred on the products right now.
Thank you so much, Vivek. We have Vikul Goyal, the Chief Executive Officer and founder at BimaPlan.
Thank you. Hi, everyone. Good afternoon. BimaPlan is an embedded insurance platform where we are building affordable insurance solutions for Bharat. This is an underserved customer segment. People do not have access, and we are trying to change that with the help of technology. Excited to be on this panel.
Great. Thank you so much, panelists. A quick introduction about myself. I'm Khushbu Soni. I'm the founder and chief editor at CIO News. We are a tech media company. We basically interact with technology leaders. We have an editorial team who provides technology news and update across sector. All right, so to begin with today's session, maybe I'll put across my first question. We'll start from that side. I'll have my first question for you. Vikul, what are some of the key trends that you've observed in the intersection of fintech and personal finance?
No, absolutely. I think the first thing is that the consumer is changing and the consumer behavior or preferences are changing. When I say the consumer is changing, the baby boomer generation is getting older, and now the millennials, the Gen Z and the Gen X population is playing a more important role in the economy, right? And their relationship with finance and their use cases of financial products are very, very different. The expectation from those products is different. Very simply, financial products and services should be invisible, right? You should not go to a separate interface or a separate institution to get access to a financial product, because ultimately any financial product is a tool or a lubricant to facilitate the way we live or consummate a transaction, right? So simple example, you go to buy a car, you don't want to go to a bank to get a loan approved and then go to a car showroom and say, this is what I can buy. You want to go to a car showroom and you should be able to walk out with the car or drive the car home rather in a very seamless manner, right? And all things, whether it's a loan, insurance, everything related to any kind of financial instrument should be taken care of at that point without any external effort on your part. And that's the expectation, right? That's, and that is a very difficult thing, I think, and that's sort of where the fintechs come in, right? It's very difficult for legacy manufacturers or distributors to kind of facilitate that, because their DNA or their core expertise is on the financial product, not on the experiential part of it, on the technology part of it. And it takes a lot to change that. And that's sort of where the collaboration between fintechs and the legacy players kind of comes in, and to create a superlative experience for this new set of customers that are entering. You add to it other challenges of, different demographics with respect to income levels, geography and so on, rural versus urban, and it complicates things further, which is again very, very different for sort of legacy distributors and manufacturers to kind of deal with, and which is where technology kind of can create a very personalized experience for different segments of customer for the same product, right? But to be communicated and to be sold in a different manner.
Absolutely. Very rightly mentioned. I mean, today consumers' demands have changed, right? In the last a decade maybe, we've seen that consumers, the Gen Zs, let's talk about the Gen Zs, they don't prefer, I mean, I don't remember going to a bank in the last couple of years. I mean, everything is digital, and that's what we now prefer, right? So the fintech, the financial organizations have disrupted the way the services are provided in many ways. And with that, I have my next question for you, Vivek. How has the fintech revolution kind of changed and has impacted the individuals? So in the ability to manage and optimize their personal finance.
I think fintechs laid the way forward for the regulated entities and showed that what can be achieved much more in a faster way as to something that you want to do in a traditional way. Today, you want to open a savings account, you can open it in 15 minutes, right? And that's how, if you see examples like NeoX, who came up with a neo-banking experience with one of the banks, they were able to open 1 million accounts in 9 months flat. And this was during the COVID lockdown that had happened. And that shows that fintechs have the capability of disrupting something even when the market is not ready. They've given the ease of accessing information. Even today, everybody does that. You want to buy with stock, you want to invest in a mutual fund. The first thing that you do is Google it and check which is the fastest way that I can put the money in. And at the convenience of sitting right at your desk, and how fast can I move the money into and get those investments on, right? So that's the place where I think fintechs have come, which has later on been adopted by the bigger banks because they were slow in terms of adoption. They were slow in terms of ensuring that this kind of comfort is given because they were all in their own comfort zones, right? मेरा customer आ रहा है मेरे पास, my customer is mine and I know that he will come and do transactions with me. But when they started seeing these disruptions, they suddenly felt the need that I also have to run along and ensure that I give those kind of services to them where I don't lose the customer to my competition, right? So that's where the disruption that the fintechs bought. I mean, classic examples like Uni, and you have who gave credit, credit on prepaid, which was an instant credit line that was given to anybody. And I'm sure that is something that the bank would have never thought, how can I issue an instant credit card to a customer? Even today, there is a process that happens in terms of evaluating you, looking at your credit report, looking at your debt to income ratio, and then giving you a credit card. But why can't you issue a credit card on the spot with just an application on the mobile phone, right? That's the disruption that the fintechs have bought, and that's where I think the market is heading.
On that, I mean, following up on the same question, what are some of the digital apps that you've seen that has evolved and brought opportunities in the financial segment? When we talk about mobile apps, we talk about digital wallets, say AI advisors. So there are a lot of these digital apps that have come in. Maybe you want to add on to that?
Yeah, so there's a lot of disruption that happened on things. So there are apps which are available where you can actually go and invest on fixed deposits without even opening an account in a bank today, right? And not many of us are aware that there are apps available. There is actually a marketplace which is available, which has an option of 5 or 6 banks today where you can do a fixed deposit creation without owning a bank account in that respective bank. Zerodha is one which disrupted the ease of making transactions on a stock market. I'm sure all the people who have had the Demat accounts probably 5 years ago, the trouble that you went through to open a Demat account versus what Zerodha is giving you or delivering you today. There's a huge difference in terms of how you're doing transactions. I myself trade on Motilal Oswal as well as on Zerodha, and you see a huge difference in terms of how the data is managed by both of them. So these are some of the examples that I'd like to quote where the disruption is happening. On the lending side, I think most of the banks have started adopting this method. If you go to any of your net banking applications on a bank today, they say there's a 5-minute loan ready for you, right? And that's how banks are also getting into this business of giving an instant gratification to the customer that yes, we have got your service and here's your service, and you can start transacting with us, right? That's where we are.
Great examples. Thank you so much, Vivek. Natasha, if you can share some insights. Fintech has always been associated with financial inclusion, right? So how has technology-driven innovation improved the access of financial services for underserved population?
Sure, happy to talk to that, especially since that's really the core mission of Kaleidofin, is how do you bring formal finance to people who are very underserved, as you said, right? Just for folks in the audience, like imagine, a kirana store owner in a really semi-urban locality or a farmer in the middle of rural Bihar, right? These are people who are still relatively not using formal finance. They are saving in gold. They are very used to chit funds. These are people who just do what their friends and family have done. And yet they are therefore missing out on a lot of the financial services that could help them better achieve their real life goals. Just like wealth management helps us, it can equally help them. And I think technology has made a huge difference in this. And I'll just give a few examples. We have seen at Kaleidofin over many years that your typical credit score, while it provides interesting data about these customers, and some of them have taken a group loan, a microfinance loan, but it very rarely gives them access to the kind of credit that they need. And to quote my fellow speaker, new to credit customers have an even tougher challenge here. And what we have done over many years is we've used technology, we've used data, we've used AI and machine learning to really figure out what kind of data sources can supplement what a credit score does for these customers. We really go into their other types of behavior. We look at past repayment data, savings data, and really it's amazing what technology can do to enable access to credit for these customers. And when I say credit, I mean appropriate credit, right? Timely credit, well-designed credit that will, really enable them to build the nano enterprises they want, to grow in the way they want. Other examples, I think we have a number of institutions in India that very effectively have operations on the ground that work with this customer today. Microfinance institutions, cooperative banks, many examples. And we also have very large institutions, our banks, our large NBFCs, who want to reach this customer segment. It's not that they don't want to, right? Financial inclusion is something RBI is very intensely promoting. Everyone wants to do it, but the challenge is the gap there. How do you reach this customer in a way that you can manage risk? And I think that's what we really find technology helps with. We have built very interesting platforms that can connect a large institution with institutions that are operationally working with this customer, but effectively evaluate credit risk and other also ability to predict personas for other products. And it's amazing what a fintech can therefore do to enable the many large institutions of this country to actually service this population in a much more effective way. So that's another tack we're taking to really embed technology into the flows for many institutions in India right now.
Thank you so much, Natasha. Vikul, if you would want to add to my same question, when we talk about financial inclusion, how is technology driving the whole innovation?
See, to drive to financial inclusion, I think you need to solve for three fundamental building blocks, right? You need to create awareness. Customers should know that they need a particular product or a service, right? And that product or service exists. Then you need to create easy means of accessibility, that it's easily accessible. You don't have to go too far, or it's right there on your phone. The third and most important is it has to create affordable products and relevant products for you. So relevance comes from the first fact that I spoke about, which is more personalized solutions to your particular needs and requirements and consumer behavior. But all the other three can only be driven by technology in my view, and I'll give you an example, right? Banking or say insurance sales, which is the area that we work in, have traditionally been driven by agents or RNs, right? Now the incentive structures for those are, they do not allow them to sell an affordable product to a person in a rural area. So how do you kind of do that? While there is a digital penetration and access to internet and everything, the trust to make these kind of transactions, financial transactions, is still not widely prevalent in those segments, right? So you need to create an easy way to generate that trust within the product and the service, and a profitable way to distribute, which again, there is a limitation with the legacy players to kind of do that. And that's where fintechs, with the help of technology, do that. And the way we do that is we work with organizations at grassroots level. So for example, we work with FPOs, and we work with agri companies in rural areas who work with large groups of farmers, right, in providing agri inputs or market linkages and so on. And we bundle or embed relevant insurance products. Now, there is already a trust element that exists between those organizations and those end consumers. And we leverage that trust, and with our technology seamlessly are able to provide a financial product at a very, very low price, but without an additional fixed cost of setting up that distribution. And that really drives mass adoption at the ground level, right? So this is a great example of how technology can do that. But without that, we cannot do that, because you need a physical paper to be transported, and the cost of doing that just prohibits you to sell that product.
Yeah, I mean, it has to be technology driven, right? Unless we adopt technologies to do these transformation, it's not going to be a game changer. All right, my next question for Vivek is, as more financial data is shared and stored digitally, concerns about data privacy and security have risen, right? We all agree to that. How can individuals ensure that the safety of their financial information in the fintech era is, it's secure? And also with the data protection bill that the government has launched, what are your thoughts around that?
I think that's a fantastic bill to have. Today, I don't think any of us are aware where is your data floating and where is your data getting shared, right? You may have done hundreds of logins, hundreds of app downloads, thousands of transactions. You have no idea where your data is floating to and who's using your data. I'm sure even today you are irritated with the kind of calls that you're getting. Insurance chahiye, personal loan chahiye. How is the data even getting leaked out at the back end? But with data protection bill, from what I could understand when I read that is it very clearly says there has to be a consent management that can be done, right? And how do you ensure that the customer is aware or the user is aware of where data is being given? The right to revoke the data is something that data protection bill brings in. And how is data helping us over a period of time? I think to add on to what Natasha said, just to take the example of lending. Today, most of the lending decisions are taken on the bureau reports that you get, and the visibility that you're getting is how much of liability is the customer having today, what's his debt to income ratio, and there's no visibility on the alternate data, which is how much investment does an individual have, how many savings has he actually done, what's his alternate income, right? So those alternate data are not available. Does he have insurances? Does he have mutual funds? Has he done investments? Does he trade in stock market? If you're able to give those data to a lender, right? I think in the previous session somebody asked how can I make an instant loan for somebody who wants to do a ticket size upwards of 75,000, which they still struggle today to do it because it's not a low ticket size item, right? So the risk is higher. But if you give a 360-degree view of a customer and say who Vivek Sridhar is, and probably introduce some sort of a credit rating for an individual, then the lenders will have much more confidence in the customer in terms of disbursing the loans, and probably the decision-making time will be reduced when those happens, right? And adding to that with the data protection, yes, because the consumer is now aware of all the data that is getting shared with the lender. Now the consumer knows that, hey, I have given access to data of my investments, of my savings, and the complete profile of myself, and plus with my bureau report. So I have a complete 360-degree view that has been given to the lender, and the lender is able to take a decision on that. So that's very important when it comes to data protection, and the bill is a fantastic bill that's been introduced, and it's just the way the new revolution is going to take place in terms of how data is going to be managed. Simple example, when you log into any website, you have a sign in via Google, right? We all do that. We all click and say sign in via Google, and we sign in with a personal account or your official account, and you do that. But do you know that Google actually has a consent management that happens at the back end? Nobody looks at it, because the moment you say sign in via Google, there's a pop-up which says you are allowing this particular company to access certain data of yours, and you say allow, and that's how you're able to log in via Google. But do you also know that in Google you can go and revoke that access? Right? Nobody knows that. And that's what exactly this data protection bill talks about. That bringing awareness to the consumer, giving that freedom to the consumer, the flexibility to the consumer, know what you want to share and how much you want to share, right? And where to stop when you're sharing data on that.
Wonderful. Thank you so much. I think this is one of the major concerns that we as individuals face today is data protection. So thank you for covering that. Natasha, my next question for you is, fintech tools has often provided these personalized user data, right? And the recommendations based on the user data. How can this level of personalization be available for individuals, and how can they leverage that data to make financial decisions?
Yeah, no, I think it's the flip side, right, of what Vivek said. It's great to have consumer protection in place and to use your data wisely, but that data can really enable individuals to make so many better financial decisions. So just to take the savings side as an example, or wealth management, most people, we've realized, find it very cognitively tough, at least I do, to go out and pick my mutual funds, right? There's like 1,500 funds. It's really complicated. I have to do a bunch of research. But I and most people, individuals, know what their real life goals are. They know they want to send their children to college. They know they want to buy their next vehicle. They know they might want to expand a room in their house. And what I think data and personalization do an amazing job with, and we've actually built at Kaleidofin a persona engine to do this, which combines the user's data, secondary data, information about their journey, but also geographically what's going on, climate-wise what's going on, various data sources. To then, you can build recommendations for customers, right? You can really recommend that this is the combination of a savings account, investments, insurance, as well as, maybe this is when you want to take credit. And I think what we have found in our journey is that people really appreciate that notion of a solution that is recommended to you, because it's really tough to go out and choose each of these 4 things and to spend the time and the effort. And now imagine a customer who's never done this before, whose parents have never done this before, whose community has never done this before. It's very challenging and it's very intimidating. So I think that's one place we have found personalization is very useful, and also that combined with good product design that can build trust, give them flexibility in how much they put in. And of course, another very important place where personalization can help is also in, building the right kind of credit health check or credit score for this customer. We've talked about this just in this panel as well. How do you use that deeper data, not just the individual's data, but a variety of alternate data sources, both at an individual level as well as at a geography, environmental level, to really now start providing the right kind of recommendations. I know we use them more on the credit end right now, but we have seen this, just to give some examples, right? We've actually been able to really, today, for example, many organizations are forced to reject almost 40 to 50% of customers who walk up to them. Usually because the criteria is not personalized. It is your credit score needs to be above this number. That's not personalization, right? Now, if you flip that over and you take a personalized score for that person and a credit health check designed for that person, the organization, we have seen massively reduced rejection rates, right? Things like 10 to 15% instead of 40 to 50%. And just think about the kind of opportunities that that personalization enables for the end customer, right? If I need a 1.5 lakh rupee loan, because that is what I need to currently grow my dairy enterprise, right? But today, I'm only able to access a 30 or 40,000 rupee loan because that's all that the standardized systems and processes today enable. I cannot grow my business at the rate I want to. And I actually have the ability and the intent to repay that loan. So I think personalization can transform what this customer can get. We have seen it working. We believe really strongly in it. And we will continue to put in a ton of effort into it. And I know all of us on this panel have, so yeah.
Absolutely. I think individuals today are changing with the generation going forward, and also their requests, their demands, their what their preferences are, etc. So hyper personalization is the way forward, and that's the key, right? Okay, my next question is Vikul, for you. While fintech offers great promise, it also comes with challenges. So what are some of the barriers that individuals might face when adopting fintech tools, and how can these be overcome? So I think the data privacy is something that we already covered, but apart from that, if you can highlight some of these barriers and challenges that may come.
See, I think the biggest, and I talk to a lot of founders who face this as well, the biggest challenge in my view is that fintechs alone cannot do anything. Let's understand this. You have to work in tandem with the regulated entities like banks or insurance companies who are actually manufacturing the products and underwriting the risk, whether it's insurance or loans or market risks and so on. In my experience and my view, I think fintech, while we talk of digitization and the adoption, there is a sense of suspicion that legacy players have towards these new-aged companies with unproven business models. And while they're all curious about what the future holds, they view it with some degree of suspicion, I feel, and therefore, it's not integrated as part of as the mainstream business. And until that happens, consumers will not be able to truly leverage the power of technology and transform and get that transformed experience. Just to give you an example, right? You may be a neobank, but you still need to operate within the boundary conditions set up by your partner banks to issue a bank account, to open a bank account, and you cannot run ahead of that in almost most cases, right? And therefore, that defines the core customer experience. So I feel that to truly bring that power in the hands of the consumer, both traditional companies and financial services companies have to operate in tandem with fintechs and embrace the power of that without being threatened or being suspicious. And I think once you kind of do that, that will remove most of the challenges both the fintechs as well as the consumers face. And I think regulators should play a mediating role there by opening it up and by kind of building that confidence between both sides.
Thank you, Vikul. In fact, I have the same question for both of you. So Vivek, if you want to take up...
So awareness is one challenge that a fintech will always face, right? I mean, at the end of the day, no matter what technology you bring in and whatever advanced product that you're able to introduce in the market, unless and until there is an awareness created among the consumer, your product is always going to fail. And I second Vikul's comment. Regulators certainly have to work with fintech, and I think we are seeing that trend happening right now. RBI themselves are coming up with a fintech arm, and they're reaching out to fintech saying that, hey, how can we work together in these areas? But the trust factor that Vikul was also highlighting is very important, because somewhere I have seen that fintechs do tend to go overboard with the products that they handle. They always try to look at a jugaad way of doing things. I think that is something that we have to aware, and that's where the trust factor with the regulator also comes in, right? I mean, when the regulator says that don't do certain things in a certain way, and we always try to find an alternate route to get that thing done, because that's what my consumer wants and that's what we want to deliver. I think that's where we lose the trust with regulators, and all the fintechs have to start learning to fall in line and make sure that you build that trust factor with the regulated entities, so that the inclusion of fintechs also happen with the regulated entities and work hand in hand with them to make better products, offer better offerings in the market, and take it next level. Yeah.
Hey, thank you so much. And Natasha, would you want to add on?
Sure. I agree with everything they've said, but I'll add maybe a different dimension of challenges and maybe focus on the challenges from the customer end. I think what we find is that trust is a huge challenge to bridge on the customer end, right? Like they have been approached in the past, and they have been duped several times. We have a history of many decades before us, not with fintechs, but they see it as one large offering, right, of financial services. And so overcoming that barrier of trust, especially when some of these products are coming to them digitally, which is foreign to many people in India. Like even if we look at older generations, rural communities, semi-urban. So I would say what we have also seen is we've been innovating on how do you bridge that trust gap, and very similar to what Vikul talked about, in terms of tech and touch. How do you provide maybe assistance at the start? But how do you quickly invest deeply in building digital confidence in the customer so that they can transition into using these products digitally? Because definitely, I think when it comes to being able to enable better experiences, better personalization, better unit economics, you do need to go digital. But I think, how do you blend that? And I think the same approach also helps with what we find in terms of, slow growth of literacy. And when I say literacy, I don't mean just, reading and writing. I mean digital, technology literacy. I mean financial literacy, right? Understanding the products that they're using. And again, I think, investing in, it takes so much tech to do this. If you want, we find, for example, reaching customers with voice is so effective. And we have had great success with, IVR calls. It's amazing. I hang up every IVR call as soon as it starts. But I'm always amazed by the listen rates of customers, especially when you deliver a good story, when you explain things in a story-based fashion. There are listen rates of upwards of 80, 90%. And now how do you take voice to go beyond interactive voice calls, to use generative AI to maybe create conversational experiences, to really make it easy for this customer to understand, trust, build both financial confidence and digital confidence. So I definitely feel that's a challenge. If we want to reach, the 800 million customers that we're not reaching today, I think we are going to have to bridge those kind of challenges as well.
Absolutely. Fantastic. I think this has been a great discussion. With respect to the time, I'll probably want to take up 2 questions from the audience. So if... Yes, sir.
Meanwhile, I have a question for Natasha. I'm like you that I disconnect every IVR call the moment I pick up. I'm curious how many people or what percentage of people actually listen to the whole message.
So we are, exactly that number I don't know, but upwards of 80, 90% listen rates for a lot of our customers, right? I would say for everyone who answers, it's upwards of that. Of course, answer rates, are another statistic, but that's also, I would say, upwards of 60, 70%. So blended, it's quite high.
Yes, sir.
Hi, it's Professor Kurupesh here, and I take care of the Fintech department. It is an extension of the question what Natasha asked. Any technology come with the trust. So why it is in India, the trust which has been shown for banking, for insurance, for digital payment and lending, still not been shown in wealth management. Because today also I want more than personalization, the person whom I can trust. So maybe I might be happy with Paytm when I'm making a payment, but I not be happy when it's managing my money. So where we are lacking in tapping the untapped market of wealth management, especially when we have a single-digit penetration in India.
Anyone who would like to take it?
I'll attempt an answer. I think the issue lies on the penetration part to where we are in our journey as an economy, right? Our GDP per capita is $2,500. And therefore, for a very large part of the population, there's not enough money for you to invest in complicated instruments. And education, again, has a role to play, right? So as the economy moves from $2,500 per capita to 5,000 to 10,000, there is additional assets or income that you have which you can put in those riskier assets. Today you want to save that money either in form of cash or in terms of investments in gold, which are safer and traditionally more acceptable forms of investment in India. I think that would be my sense of why that penetration is so low. And secondly, to the trust, because it's not an abundant asset or resource you have, you need to save every penny of it. And unless you're very sure of where you're putting it and it's safe, you would not want to take that risk. I think that would be my...
Can we have the mic please pass to the gentleman out here? Our second question. Your name, please, and a concise question.
Yeah, my name is Ashish Kaushik. I'm founder of Gold Money. So my question is directed to Natasha, ma'am. So basically, ma'am, what problem do people in Middle India face when it comes to saving? Okay, and how Kaleidofin and what other player in the similar sector are trying to solve these problems? Because while doing surveys and everything, we found these people need these products, but we are not very much sure about the exact problem because you are in this segment from a long time now. So what problem do you foresee these people face and what solutions are currently they are having? Thank you.
Sure, no, happy to talk to it. And I don't think there's any right answer, but I agree with you on one thing is that they want to save and they want to grow their money. So it's not, I feel, very often we would hear early on that, people need credit more. And because they have a loan, they can't save. Now, we have seen that disproven again and again. And there are many actually studies that are done by very reputed institutions that also show that people can take a loan for certain purposes and save at the same time. I think, so I think the need is there. I think we've seen that across the board. We've had a very, big investments in saving solutions. And we've seen also that, sometimes we used to get told that people like to save very small amounts, right? If you give them the option of saving 50 to 100 rupees, they'll save. But if you tell them to save more, they won't. We actually personally also, in building out our products, found that to be disproven. We had saving solutions that said, start with monthly savings of 1,000 rupees, 500 rupees. We actually found people, especially, so one thing we found worked really well was tying it to their real life goals. If you don't just leave it at an empty, you should save, which is very prescriptive, but instead you turn it into what are you saving towards, right? Are you saving towards that goal of your child going to college? Suddenly that puts a number on it, right? You have to get to X amount in 3 years. Suddenly the need for that saving today and this month becomes urgent and the amount becomes very clear. We find that helps a lot, right? Because usually the amount of their goals versus the level of savings should be proportional to really achieve your goals. That really helps. I think also I agree with the aspect of awareness. Very often as distribution networks or products, we have not been able to reach the set of customers very effectively that we need to, right? We have not been able to reach that scale. And I think today, most of the, disruption that's trying to happen is digital. Because we just jump to the conclusion, and of course, the unit economics of going digital are better. But many of the customers who have not broken into the savings world are not digital yet, right? Yes, there are great numbers. Rural internet usage, for example, has surpassed urban usage. We hear this a lot. And it's great, and we're super excited about it, right? But usually, it's one smartphone in the household. It's used usually by a young person in the household, usually for education purposes, YouTube, WhatsApp. But they're not getting financial recommendations yet from that phone. They don't trust that digital vehicle as the only recommendation for savings. And so I think we do need to invest a lot more in creating awareness in the right kind of savings products and reach that customer in ways that are maybe partly digital, partly tech and touch to start with, really invest in the kind of campaigns that appeal to individuals and grow that, right? And really customize, personalize again to make that happen. So,
Sure. Yes,
Good.
would you
I
like to have
think-
your final word, Ms.
No,
Soni?
I think it was a great conversation, great dialogue. We did capture a lot of aspects of the challenges in the digital era, right from awareness to data privacy, etc. So thank you so much, panelists. Thank you so much, audience, for your patience, and I hope this was insightful for everyone. Thank you so much.
Absolutely.